All right, let's dive into something really interesting today. We're looking at a company called Tex, and hidden inside its financial reports is a genuine corporate mystery. Seriously, between 1 year and the next, a massive piece of their business, worth billions, seems to have just vanished.
And that's the central puzzle we're going to unpack. How is that even possible? A billion-dollar operation doesn't just disappear into thin air. So where did it go? We're going to play detective and follow the data to find out exactly what happened here.
So, every good investigation starts with the evidence. And in this case, all the clues we need are right here, laid out in the company's own financial reports. This is where we start digging.
Okay, take a look. This is the first quarter of 2018. Tex looks like a pretty diversified company, right? You've got 5 business segments: textiles, pulp and paper, real estate, a little others category, and then, boom, right in the middle, this huge segment, cement. Remember that one.
Now, let's jump forward just over a year to the second quarter of 2019. We see textiles, pulp and paper, real estate, others, but wait a minute, look at that. The row for cement is just empty. It's completely gone. The biggest part of the company has literally disappeared from the report.
To really get our heads around just how big of a deal this is, we need to rewind a bit. We've got to understand just how important that cement division was. This wasn't some tiny side project. This was the very heart of the company.
And just so we're all on the same page, when we talk about a business segment, you can think of it as its own mini company living under a larger corporate umbrella. Companies report on them separately, so everyone, especially investors, can see what's working and what's not.
Now this visual says it all. Look at the sheer dominance of the cement division. Back in early 2018, it was pulling in 57% of the company's total revenue. I mean, that's more than all the other parts of the business combined. This wasn't just part of the engine, it was the engine.
And to put a number on it, just look at that. We're talking nearly 12 billion rupees. That's well over $1 billion in a single 3-month period from just one division. And then, a year later, poof, it's off the books.
So, what on earth happened? Did this massive profitable business just fail? Collapse overnight? No, not even close. The answer is way more interesting, and it lies in a huge, deliberate corporate strategy.
And here it is, the solution to our mystery. The business didn't vanish, it was demerged. Now, that's a fancy corporate term, but all it really means is that Tex intentionally spun off its entire cement operation into a brand new, separate company. This wasn't a disaster, it was a decision.
Which kind of brings us to this idea. Why would you ever get rid of your biggest moneymaker? Well, it's a classic, counterintuitive strategy. The thinking goes that by separating a huge division, both the old company and the new one can be more focused, more efficient, and ultimately more valuable apart than they were together. Sometimes to grow, you actually have to get smaller. Okay, so we've solved the what happened. Now let's get into the so what. What does a move this massive actually do to a company's financials? The numbers here, well, they tell a dramatic story.
And the most immediate, jaw-dropping impact is right here. The top-line revenue. The company's quarterly income from its operations just fell off a cliff, from over 20 billion rupees to under 9 billion. That's a drop of more than half, a direct consequence of that cement money being gone.
And it wasn't just the money coming in. The entire size of the company just shrank. Its total assets, we're talking factories, land, cash, everything it owns, dropped by 37%. Just think about that, a company becoming over a third smaller almost overnight.
But, and this is the really important part, this is the other side of that coin. Check out its liabilities, its debts. They were slashed by an incredible 60%. See, by spinning off the cement business, they also spun off all the debt that came with it. All of a sudden, the remaining company was financially a whole lot leaner.
Of course, you can't just get rid of your most profitable business and not feel it on the bottom line. No surprise here. Profit before tax fell by 62%. This was the calculated trade-off. You lose your main profit engine, and you know your short-term profitability is going to take a major hit.
So let's just quickly recap what we've seen. Revenue is way down, profits are down, and the company is physically smaller. But, and this is the big but, its massive debt burden has been cut by more than half. This is the very definition of a company hitting the reset button.
So all of this brings us to our final question. After this huge seismic shift, what kind of company was left standing? What is the new Century Tex all about?
Well, without the gigantic shadow of the cement division looming over everything, the company's identity is suddenly much clearer. It's now a business focused on three main things: pulp and paper, textiles, and real estate. That's their new core mission.
And this bar chart tells that new story perfectly. Look at that. Pulp and paper is now, by a long shot, the new profit engine for the entire company. Real estate and textiles are still important, for sure, but pulp and paper is clearly the new star of the show.
So when you boil it all down, what we've just walked through is a massive strategic trade-off. Century Tex gave up being this huge, sprawling giant that was weighed down by a ton of debt in exchange for becoming a smaller, nimbler, and more focused company with a much, much cleaner balance sheet.
And that really leaves us with the big final question, doesn't it? When a company intentionally sheds its largest and most profitable part, does it become weaker just because it's smaller? Or could it actually become stronger because it's more focused and not drowning in debt? The numbers tell us what happened, but answering that question, well, that's what strategy is all about.